Hello there today, viewers. On behalf of the Market 360 advisors here at Stewart-Peterson, I'm Bob Devenport, and this is your Dairy Week in Review for August 22nd, 2014. So to get started here, let's take a look at where our CME dairy components settled at the conclusion of this week's trade. It was a pretty positive week overall, with blocks settling at $2.26 1/4 this week, up 4 1/4 cents. Barrels settled at $2.26 even, up 5 cents this week, and cash butter settled all the way up at $2.82 1/4. That's a new record high, up 16 1/4 cents this week. September whey settled at 66 3/4, down 1 1/4 cents, and September non-fat dry milk settled at 158 1/2, also down 1 1/4 cents this week. Shifting over to Class 3 prices, September settled at $23.53, up 89 cents on the week, and October settled at $22.44, up $1.34 a hundredweight this week. That now puts our 2014 average price up at $22.17, with a gain of 30 cents over the course of the week. So let's take a look at what we exactly saw take place during the spot cheese trade this week. Here we have a weekly chart of our black barrel average, and you can see here that we've been on a pretty tremendous run higher here over the course of the past several weeks. We did finish our 4th up week in a row here, with the black barrel average rallying another 4 5/8 cents here this week and settling at $2.26 1/8 for the black barrel average. So we have been on a really nice rally here in both cheese and butter. Basically, it seems like it's still supported by these tight supplies, and really the lack of inventory being rebuilt here has just led to this spike in spot prices here. The buyers are just being really aggressive and trying to get all that product, but the sellers are starting to scale in a little bit more at these new high prices here. So it may be tough for the market to really sustain these high spot prices, especially since we are starting to see global prices really continue to decline. Fonterra prices have been in a steady decline going all the way back to the first week of February, and our spot prices are at very large premiums to the rest of the world's cheese and butter prices at this point. So that could really start to weigh on our spot prices going forward, especially since we have been starting to see the US dollar show some strength here this week as well. That could also play a part. So shifting over to spot butter now, as you can see here, this low is August of 2013, so we've been in a pretty constant uptrend in butter, more or less straight up here recently for spot butter prices, and we did rally to a new record high for spot butter today, and we settled at $2.82 1/4 cents. That takes out our prior record high of $2.81 even that was set back in 1998. So again, a new record high by just 1 1/4 cents here today. But you can see that we've been seeing just some massive strength here out of butter just over the past couple of weeks. But at this point in time, though, we did have our latest Fonterra Global Dairy Trade auction on Tuesday of this week, and our spot butter price is now over twice as much as where Fonterra butter is priced at. And that is just a very uncommon spread to see between CME butter and Fonterra butter. So I think it'll be somewhat tough for our spot market to sustain that kind of spread. Likely over time we'll have to see a correction in our butter market to get more realigned with where the global prices are at, or we run the risk of just pricing ourselves right out of the export market, and that would mean real risk for milk prices here, because high exports have really been one of the main drivers of this big rally we've seen over the course of the past year. So let's take a look at what we did see in Class 3 now this week. Now let's take a look at our daily chart of our second month contract, which is still September for about another week and a half or so before that rolls into the front month spot. Now as you can see here, we did see a nice spike higher throughout this week. Every day we posted gains for the September contract, and on the week we rallied a total of 89 cents, and again the September contract settled all the way up at $23.53 this week. So again, the majority of that support just coming from from the high demand in our spot cheese and butter prices. Both were bid up significantly higher this week, and we're at some pretty extreme prices, specifically with butter putting in a new record high. But with the block butter average at $2.26 in an eighth year, that offers a lot of support to these nearby class 3 months. So again, fueling that 89-cent rally on the September contract here. Now the risk we do see at this point again is if we do see a fall off in any export demand or a fall off in demand within our spot markets due to these higher prices, that's likely going to cause a lot of this extra premium that's priced into these nearby class 3 months though to erode away once we take away that support out of the spot markets. Whereas the more deferred months, once you get out to the end of 2014, out into 2015, there isn't very much premium priced into those months, so we can afford to see quite a pullback in the spot markets before hopefully seeing too much of an impact on those more deferred months. So the months that would be most at risk at this point would really be September and October, because they do have that extra premium priced in for now. Now looking at some more fundamental factors, we did receive our July milk production report this week, and it showed that July production was up 4% year over year for the 23 major states. Now again, that's compared to the red line here actually is 2013, and the green line here is 2014. So you can see it's a pretty wide spread there and some good growth on a year over year basis. 4% growth for the month of July is a pretty big increase. Typically on average for the month of July, we see about a 1% increase year over year, so it was a little bit more of a bounce higher in production than what we typically see for the month. So finally it seems like production is starting to tick up, and I think a lot of that also has to do with the fact that the herd size continues to increase. So the dairy cows on farms, and this again is also for the 23 major milk producing states. You can see the purple line here represents 2014, and we've pretty much been on a steady uptrend for all of 2014 for herd growth here. And in July, for the 23 major states, the total herd was 8.58 million head, and that is up a whopping 56,000 head from where we were at in July of 2013. So you can see here that it's been a little while since we've seen such a steady uptrend like this, and an obvious result of that is going to be higher production. So if we continue at this rate here with all these extra cows here, production is likely going to probably continue to increase quite a bit over the next coming months here. I'd say that we could see some higher production than what we've seen prior to July, where we've been around a percent and a half, nothing real major. I think we are in to see higher production increases on a year-over-year basis going forward here for at least the next several months. Now looking at the week ahead, we will have a cold storage report out later this afternoon. Other than that, next week is pretty quiet as far as dairy reports go, so tune in next week and we'll recap what we saw on this afternoon's cold storage report. Other than that, that is going to do it for us here today. On behalf of the Market 360 advisors here at Stewart-Peterson, thank you for watching and have a great weekend.